Welcome back to this special coverage. We have Reliance Industries numbers flashing for you on the screen. Let me just take you through the headline numbers. The revenues have come in on a consolidated basis at 2.25 lakh crores versus 2.32 lakh crores last quarter. So slight bit of improvement on the top line front is what we're seeing. It's largely a flat performance on the EBITDA. On a quarter-on-quarter basis, 40,650 crores is what we've seen versus 40,968 crores last quarter. So largely a flat performance, you'd have to say. The margins on a consolidated basis have actually improved compared to what we saw last quarter at 18.1% versus 17.7%. So these are Reliance's consolidated numbers. Remember, this time around, although the oil to chemical business has been slightly on the weaker side, it's been offset by stability in the consumer businesses. Reliance Jio's numbers a while back were quite stable. And also in the oil to chemical business, there was a planned maintenance shutdown that the company had undertaken. And because of that, that impacted both the yields and the profitability for the Reliance Industries. And that explains the kind of, sober performance in the oil to chemical space. But the consumer facing businesses, both Jio as well as retail, have delivered a stable set of numbers. And that perhaps will offset the weakness that we've seen in the oil to chemical business. So largely numbers flat on a quarter-on-quarter basis. The margins have actually improved a tad bit. But over to my colleagues to give us more on separate, on the internals. How's the oil to chemicals business looking?
Well, it was something which was expected. As you pointed out, there was a planned shutdown. If that was not the case, the numbers would have looked really good. In fact, the company does say in its report as well that planned maintenance and inspection shutdown of CDU and FCCU. It delayed coking and ROGC complex. It impacted yields for the company and the profitability as well. Otherwise, O2C would have been higher on a YY and on a quarter-on-quarter basis if all major units were operational during the quarter. And these maintenance shutdowns actually happened. This is something which was par for course across all the businesses, not only Reliance. And it takes place once in 7 to 8 years for, improving the efficiency as well. So this is something which is a one-off. Otherwise, the numbers would have looked really good for the oil to chemicals business as well. That's about O2C. Just a word on the oil and gas business as well, because it's a record high EBITDA that we are looking at the oil and gas business, because their KG-D6 basin, it came up with higher volumes because most of the clusters were operational. So the EBITDA there has come in at 5,804 crore rupees, which is higher than what Kotak was estimating. And it is a big increase both on a YOY and on a quarter-on-quarter basis. So it's definitely a thumbs up for the oil and gas business because record high EBITDA, and it is continuously improving by the quarter.
Well, you guys are talking about flat numbers year on year, etc. I don't know what that means because the retail business has been jumping. It's been running leaps and bounds. Just a few quarters ago, the number was 67,634 crores. Now that number has jumped all the way up to 83,040 crores. That's a record-shattering quarter that we are seeing for Reliance's retail business. The street was gunning for decent growth year on year. They were gunning for 20% growth in the retail revenue and expecting a 30% growth in the EBITDA. Guess what the company has done? 23% growth in the retail revenue and 31% jump in the EBITDA. EBITDA margins for Reliance Retail have improved by around 50 basis points. So looking at a 23% growth year on year in Reliance's retail business, 31% growth in Reliance's retail EBITDA, close to around 6,271 crores. So record high revenue, record high EBITDA, and margins have been sustained from the last quarter at around 7.6% as well. So the retail business, it is indeed all guns blazing. We have some commentary coming in from the management as well, where, Mukesh Ambani says that the retail segment has delivered an impressive financial performance with its rapidly expanding physical as well as digital footprint. They remain focused on enriching customer shopping experience by adding new brands to their portfolio, and the new commerce initiatives continue to support the growth journey. Three things we are looking at in the retail business: them increasing their footprint, them seeing higher footfalls, and then seeing benefits of operating leverage. All of them seem to have fired.
Okay, so retail business doing well, Jio business is stable this time, and as we said, the oil to chemicals performance is actually quite resilient despite the major planned maintenance shutdown and inspection shutdown of their key units. There was a very challenging margin environment as well. Despite all of that, the oil to chemicals business has been quite stable. In fact, Prakash Diwan is joining us now to give us his view on the numbers. Prakash, the consumer-facing businesses continue to fire on all cylinders. Very stable growth over there. On oil to chemicals, yes, there was a planned maintenance shutdown, so that sort of, derailed the business a tad bit. But otherwise, stripped of that, it was a good performance. Your thoughts on the overall numbers?
Oh, absolutely, Sonia. You said it. this was expected. And look at the kind of a trend that's getting very well established and well seated. The consumer-facing businesses about 7 years back were just about 15% of contribution to EBITDA, which is now almost 50%. Now that means that if you go back to the last year's AGM where Mr. Ambani said that retail is going to be the fastest growing piece in this whole business conglomerate, you will see retail actually march ahead in spite of all the weakness in mass consumption, and you could keep on arguing about how things are seriously not yet come back in terms of demand. But interestingly, the other thing I was looking at is the O2C business. While it might have, of course, the shutdown, the maintenance shutdown in this quarter has had this impact and was anticipated, and of course, refining margins have also contributed to that softness. It's actually on a YOY basis very impressive. So what it tells you is that gas, which was not such a big piece, and I'm sure Sonal can throw more light on that, has started contributing to that, apart from the softness in margins getting offset with this. So I think it's a wonderful performance. Last time when we were speaking about on 29th November, about on Q2 numbers, nobody anticipated it could be so soon. All the improvement in the consumer-facing business that was expected. But this is actually real and it's happening now.
And Prakash, we are talking about, you mentioned oil and gas business. The company says that they are currently producing 30 MMSCMD gas in this particular basin, and which is a big part of what India produces as well, right? So in terms of consumption, India has a consumption of 150 MMSCMD of gas, out of which 50% is imported. And out of that, if 30 MMSCMD comes in from Reliance Industries itself, that's a big chunk of gas that Reliance Industries is providing to the overall economy as well. So give us a sense of which do you think be the trigger going forward, because oil to chemicals business continues to be the cash cow, right? But what is your sense on how we should look at these two businesses going forward? Because macros are something which are not in anyone's hands.
No, absolutely, and that's precisely why you will have to brace for volatility on the O2C business. There's so many geopolitical triggers that could go wrong, and oil as a commodity is actually going through a phase of reset which is never seen before. I mean, if you see a decadal move in oil, it's absolutely in a zone which is so unpredictable in spite of so many factors which conventionally would have brought it to some sort of an elevated level. So I think the consumer-facing businesses, where you have to realize that the company has spent about close to $12 billion in the last 3 years. 11.7 is the exact number, if I remember correctly. And all of that, whether it's to improve on the brand acquisitions that they've done in retail, whether it's the rollout of the 5G, which is significantly large now. So even the Jio numbers tell you that almost, I think, close to 15% plus of the overall revenues coming from 5G, which has yet not been priced as per market, if you ask me. So there's enough room for an ARPU hike, a price hike, which could lead to some improvement in ARPUs, which has not yet happened. It could probably be in the second half, but then that's more driven by competitive pressures. But I think the consumer-facing businesses will offset all the volatility that you see in the O2C. And the O2C business is not now capital hungry in that sense, because all of that has been done. You just have to keep on reaping the benefits. So the return ratios are favorable because of that. And I think the way the consumer-facing business is showing results of all this $11.7 billion that we invested, retail could probably become a juggernaut, which could be unstoppable given the store incremental strength, the brand acquisitions, logistics. This thing.
Prakash, you're speaking about retail becoming a juggernaut. We have some more details in the retail business as well. Total footfalls have crossed 28.2 crore. So that's 282 million people visiting Reliance stores. Total store count at the end of the quarter was 18,774. That's nearly 73 million square feet that they have in terms of retail space. How much did they add this quarter? 252 new stores. For perspective, DMart operates 370 stores all in all. So they've added nearly 70% of DMart in just one quarter. Digital commerce and new commerce now contribute about 19% of the revenue. How has all their vertical growth been? Grocery, 41% growth. Fashion and lifestyle, 28% growth. Consumer electronics, 19% growth. Do you think, Prakash, it's time now to perhaps value unlock here and make Reliance Retail a separate entity, given its big lion's share in the overall scheme of things right now?
So I think that has been something which all of us have been waiting to see happen. But probably now you're right, now it's closer to ever before that, it's reaching that stage where it could. And remember, the last round of valuation that money came into retail was 8 billion plus. So you're talking about a significant amount of a size of a float if there were to be any at whenever it happens, maybe this year, next year. But the point is that this scale is something which also will start getting pegged on a global basis. It's comparable to some of the biggest players in this thing, but the growth is probably even better than most of the global players. So that's the advantage. So I'm sure the company will decide in terms of timing when it's the more opportunistic in terms of bringing it to the public markets. But yes, it is significant, and going forward, there are brokerages which are expecting 95% of EBITDA growth to come from consumer-facing businesses. So you can imagine how significant this will be. We started tracking Reliance from a oil and gas perspective, and now we're moving towards a complete retail side. So it's really remarkable the way the company's changed it along with the times, and then make sure that the stakeholders are always rewarded,
Sure.
and not kind of caught up the wrong.
Prakash, just wanted to spend a little bit of time on the Jio business as well. We got some of the numbers earlier, but the Jio business has been very steady too. It's a revenue growth of 2.5% quarter on quarter, and the top line growth is driven by strong subscriber additions this time around. The Jio EBITDA margins come in at 52.4%, so it's been stable for the last 5 quarters, and the average revenue per user has increased 2% year on year to 181.7. The company says there is a better subscriber mix that's partially offset by unlimited data allowance on 5G network. And the subscriber base of Jio now has gone up to 470.9 million versus 459.7 million quarter on quarter. So there's an improvement that we're seeing across parameters in the Jio business, both in terms of average revenue per user and the subscriber base as well. Prakash, on the stock particularly, what do you see as the move? Now we'll have a reaction tomorrow as well since we're trading half day. The stock has already gained about 10% in the last 1 month. It's now about 3-4% away from its 52-week high. Do you see it build on to those gains, and what do you recommend shareholders do now?
Of course, existing shareholders just have to continue, with reposing the faith in the business and the company. Given the way, there's so much of clarity in terms of where the growth is going to come from, right? So, and remember, this quarter, the current quarter will also make up for all the slowdown in the O2C segment. So that means you'll probably have a unique, and if there's a price hike that gets imminent, you probably have all 3 businesses peaking out or at least firing in that sense. But I would believe on the stock from the last quarterly numbers to now, if you see, there has been a significant amount of addition to most portfolios. Some of the funds institutional investors have almost 7 to 9% of the holdings in Reliance. So there's not much of room where you will keep on having ownership go up in that sense. But you'll probably have a lot of ETF money that will, see this stock being chased. So I would believe it still has some legs. The anticipation will be that this quarter, March end quarter, will probably be even more promising. And from that perspective, it's probably very likely to cross that 52-week high and at least see that 7-8% of a markup even from here on for this particular quarter at least.
Okay, all right. Prakash, hold on. We also have Dipan who's joining us now. Dipan, thank you so much for joining us. And if you've just tuned in, let me take you through the numbers as well. Reliance Industries has reported numbers where revenues have come at 2.25 lakh crore rupees, which compares with 2.32 lakh crore rupees on a quarter-on-quarter basis. The EBITDA has come in at 40,656 crore rupees, which compares with 40,968 crore rupees. This is again on a quarter-on-quarter basis. EBITDA margins are higher, both on a YOY and on a quarter-on-quarter basis, to come in at 18.1% versus 17.7% on a quarter-on-quarter basis versus 16.2% on a YOY basis, and the net profit as well is higher, has come in at 17,265 crore rupees. Dipan, this time around we have seen resilient performance from the oil to chemicals business, barring the shutdowns that the company spoke about. The retail business has done really well, and we have decent numbers coming in from Jio as well in terms of a 2% increase in their average revenue per user. The subscriber growth has been decent. What do you make of the numbers, the headline, and then, of course, we'll speak to you about the segments which have stood out for you as well?
Yeah, good evening and thank you for having me on the show. I think numbers are broadly in line, and the real surprise, of course, has been the retail ventures, and those have done really well. and to grow at such a huge scale at these levels is impressive. Stock will react mildly positive as well. But there are two big concerns with Reliance, and those I think are lingering in the minds of investors. The first, of course, is the unlocking of the value of the two businesses, the retail and the Jio ventures, because that is now where Reliance is now a large conglomerate, and when you are buying Reliance Industries, you're getting into a multitude of businesses, some of which you may want to own, some you may not be so positive on. And second, of course, is the low return on investment ratios. But apart from that, I think these numbers are broadly supportive. And I do feel that large cap stocks will be in focus in 2024 as they're perceived to be safer. And from that point of view, I think it's better to be overweight Reliance.
Okay, better to be overweight Reliance. Dipan, even on the telecom business, right, across parameters, things have picked up. So the average revenue per user has picked up. The subscriber addition has picked up, and there's very positive commentary on the telecom business as well. The EBITDA margins for the last 5 quarters have been stable at 52% plus for Reliance Jio. Putting all these businesses together, of course, oil to chemicals had a bit of a planned shutdown, so there was that little bit of a setback. But putting all of this together, would you recommend accumulating more of the stock now, given the kind of run-up that we've already seen, I mean, in the last 1 month?
See, yeah, of course, the run-up in the last 1 month is considerably less compared to the underperformance, if you see, on a relative basis for the last 1 year or so. And that's because all the focus has been on small mid-cap stocks. But I think that is bound to change. It's still Reliance Industries, even at such scale, remains a growth stock and a growth company. And I'd like to hear more from the management about the new ventures and the new investments they're making in green energy, because that could also be a growth engine for the company. So from all points of view, I think there's no real negative or disappointment in the entire numbers, not just this quarter, but for the last several quarters or so. And valuations are not out of whack. In this market, good quality companies growing at 12-15% are trading at significantly higher price to earnings multiple. And the fact that Jio has such a large consumer business, I don't think is fully reflected in the valuation of the company. I think on a standalone basis, Jio as well as retail would be significantly higher value than as a combined entity.
You know, that was actually my question. You said that valuations are not out of whack for Reliance. Just to put things into perspective, this quarter they did revenues of close to around $10 billion if you convert the 83,000 crores that they sold in the retail business. And the last known valuation at which investors came in was close to around $100 billion. Annualize this number, Deepen, and you will get around $40-45 billion in terms of revenue. That values the retail business as just about 2 times sales, which isn't particularly bad considering that a lot of other retail companies are trading at much higher valuations. So do you think that there is case for the retail business valuation itself to jump from the current $100 billion that it's trading at?
Yeah, absolutely. And there's always a premium for scale of businesses, because that's what really attracts the large, deep pocket investors. And look at the consistency of performance also coming through the retail. And also the fact that there's a huge opportunity in the retail business as the shift takes place from the unorganized to the organized. And Reliance Retail has its, pie and fingers in almost every pie, right from premium products to the absolute household products as well. So where do you get such businesses? I think globally also one needs to see. I think it's like an equivalent of an Amazon in India.
Okay. Prakash, the company has also spoken about a capital expenditure amount of around 30,102 crore rupees for the quarter, which is around $3.6 billion. Do you think there could be a fresh capex cycle we could look at, or the capex that they had announced earlier, including new energy, the 5G rollout, that is something which will still have a lot of tailwinds in terms of business performance?
Oh, absolutely. I think the investments that were earmarked some time back, we just started seeing those getting phased in that sense. So and I don't think the company needs to invest too much into the O2C business or the telecom business, where the 5G rollout is virtually complete, and it's just a fulfillment and the migration. So if you look at the data of the number of subscribers that have migrated to 5G already, so a lot of the objectives that were set out for the capex which started in these businesses is actually being met. So I don't think there'll be too much of a worry in terms of the company spending more and hence diluting the return ratios further. So that's kind of been a concern somewhere last year. But last 2 quarters very clearly indicate that things are coming back in that sense. So the balance sheet also is fairly robust, and I don't see any issues with that. In fact, the hydrogen business, the new energy business, all of that is probably going to be taking some time before it starts absorbing all that capex. So all said and done, the cash flows are going to be in a very healthy way. The consumer-facing business are throwing up enough cash that will kind of set off the expenditure that would go in the new energy verticals.
All right, Dipan and Prakash, thank you so much for stopping by and analyzing those numbers threadbare for us. So in case you've joined in late, Reliance Industries numbers across all parameters, actually the numbers are looking pretty good. Of course, the oil and gas, space for them was impacted because of this planned maintenance shutdown. But stripped of that, the consumer-facing businesses are very, very strong. It's been a stellar performance from retail this time around. Telecom has been growing very well quarter after quarter, and across the board, revenues coming in at 2.25 lakh crores versus 2.32 lakh crores last quarter. EBITDA also picking up, EBITDA margins at 18.1%, and very steady businesses across the board. Any final comments on the oil and gas as well as the retail space?
Yes, so I'll be watching out for the oil and gas space because it has continuously performed very well for the company, and that will continue to be the case because gas prices, they continue to be at elevated levels. So that is something which will do well for the company going forward. And for oil to chemicals business, we have seen a pickup in crude oil prices, and that is something which could improve cracks as well going forward. And of course, the units have come out of the maintenance shutdown as well. So that is something which will improve yields and profitability.
Well, for me, I'm just looking at the $10 billion in quarterly revenue for a retail company. When did we ever imagine something like this would happen in a country like India, right? $10 billion is what Reliance Retail has reported in their revenue, and they're not loss-making. In fact, they made EBITDA of close to around 6,300 odd crores, which is higher than most companies' revenues itself. So I think analysts will be running out of ink making projections of where this behemoth actually goes. And for starters, I do believe that this $100 billion valuation that Reliance Retail was last funded at should see a bit of an upside readjustment, and as a result of which that should reflect at least in the stock price from a retail standpoint.
Okay, and in the press release, they also talk about how the retail segment has delivered an impressive performance in both physical as well as a digital footprint. So, an omni-channel presence is what they're looking at in the retail space, and that's worked out for them very well. With that, it is curtains down on this special coverage. Across all parameters, there's growth in Reliance's numbers. Of course, oil to chemicals impacted by that planned shutdown, but stripped of that, it's a very strong performance seen in the consumer-facing businesses. Thanks a lot for watching. We'll come back with more.